Welcome to The Explainer. Today, we are breaking down a massive proposal that could completely change how millions of us in India deal with our money and our taxes, the Direct Tax Code 2025.
So let's just cut right to it. The one question that's probably on your mind. Is the whole headache of filing taxes actually about to get a lot simpler?
To figure that out, we're going to trace the entire story of this thing. We'll start with why we even need a new code in the first place, then dig into how it could change your paycheck, see who really benefits, and finally, look at what has to happen for any of this to become real. So, first things first. Why the huge effort to replace an income tax act that's been on the books for over 60 years? What's so wrong with the old way?
Well, it really boils down to this. A tale of two systems. On one side, you've got the 1961 law. It's been amended and added to so many times it's become this maze of confusing rules and language. But on the other side, the goal for the new Direct Tax Code, or DTC, is the total opposite. Simple language, clear rules, and a modern design that's actually built for the 21st century.
So what's the government actually trying to achieve here? The goals are pretty straightforward. Make the rules so simple that more people actually follow them. This should naturally boost compliance, cut down on tax evasion, and lead to fewer legal battles. And their main strategy for doing this? To literally slash the number of rules in the law by almost a third. The idea is to create a tax code that's just smaller and easier to understand.
Okay, let's get into the part that most of us are probably listening for. How can all these changes actually affect the money we see in our bank accounts every month?
The first big headline number is this one. A major jump in what's called the basic exemption limit. The proposal raises the income level where you even start paying tax all the way up to 4 lakh rupees. That means more people on the lower end of the pay scale would pay zero tax.
And here are the proposed new tax brackets themselves. The thing to notice here is the more gradual climb. There are more steps, and the tax rates at each step are lower. So, for instance, if you're earning 10 lakh rupees, you'd now fall into a 10% bracket. It's designed to give some real, tangible relief to middle-income earners.
But the story doesn't stop there. This is where it gets really interesting. Because of some new and improved tax rebates, it's possible that someone earning up to 12 lakh rupees a year could end up paying zero income tax. For a huge slice of the salaried population, that is an absolute game changer.
All right, let's look beyond just the numbers, because this new code is about more than just the tax rates. It's about overhauling the entire system, right down to its foundations.
And here's a perfect example. You know that old confusion around the previous year for earning money and the assessment year for filing taxes? It's been a headache for decades. Well, the new code just gets rid of it, scraps it completely. Instead, you get one simple, unified tax year. It's a small change on paper, but it removes a huge point of confusion for everybody.
And the code is just packed with other modernizing reforms. Things like extending the tax holiday for startups, making TDS rules way simpler, and even providing some property tax relief. You can see the pattern, right? The goal is to create a system that's not just simpler, but one that actually supports economic growth and feels at home in a digital world.
Okay, so with any big policy change like this, there are always going to be winners and, well, some losers. It's just the reality of it. So let's break down who is likely to come out ahead and who might not if this thing becomes law. The clearest winners? The middle class, for sure. They get the higher exemption limits and those lower tax brackets we talked about. Small and medium businesses also stand to gain a lot from the simpler rules. And frankly, you could argue that any taxpayer who's just tired of all the complex paperwork is a winner here.
So, who's on the other side of that coin? Who might not be celebrating? Primarily, it's going to be high-income earners who won't see as much of a benefit, and also anyone who became an expert at navigating the old, complicated system of deductions. Their advantage might disappear as the new code favors simplicity over loopholes.
Now, it is really, really important to remember this. Everything we've talked about so far is just a proposal. It's a plan. For any of it to become reality, it has to survive a journey through the legislative process.
And it's already been on quite a journey. The bill was introduced, then pulled back after a committee reviewed it, and then brought back with some changes. The government is aiming for an April 2026 launch, but first, it has to get through both houses of parliament and get the final sign-off from the president.
From the government side, the messaging is very confident. The finance minister has framed this as a much-needed upgrade, saying they've listened to feedback, fix the issues, and that this new bill will deliver a clean, simple, and updated tax code.
But it's not without its critics. Tax experts are basically saying, hey, we love the idea of making things simple. That's fantastic. But they're also raising some red flags. They're worried that some of the specific changes, especially around things like long-term capital gains, could actually end up hurting the investment climate. It's a classic case of the devil being in the details.
And that really brings us to the bottom line. We have this blueprint on the table for a radically simpler tax system, one that promises less confusion and, for many in the middle class, more money in their pocket. But with its fate still being decided in Parliament, the huge question remains: will this ambitious vision for our taxes survive the journey and actually become our new financial reality?